Welcome back to Investing with Confidence. I am your host, Joshua David. Having a great time. And Al, I can barely see you. It's kind of hazy in here. What's going on?
You better shut the windows.
I know. If you happen to miss 2 tickets for the investing class, call 952-814-4410 or text the word invest to the number 484848. You'll receive a link back to register for the free class. If you're just tuning in, Al was shedding some light on having proper tools in your investment strategies, whether you're trading stocks, but also having options, futures, Forex, being properly diversified in multiple assets, not just multiple stocks. And as Al, you want to get into this next topic here, it's kind of a retirement topic. We talk about retirement every week, and that's a big topic here. Everybody wants to do that at one point, or at least slow down their working years. Now, there are a lot of listeners right now that are probably nearing retirement and saying, hey, I may have to work forever, and what can I do differently to not have to do that? But maybe they just want to work part-time, and they're saying, oh, I don't know if I can do that either. So a lot of people are living the life in retirement that it's not what they had planned for. Why is that happening to a lot of people, but how can people not let that happen?
Yeah, well, and that is the key. But think about this. If you have a plan now, if you're not retired and you have a plan, what is that plan based on? Because we're living in an ever more complex world. Things change on a regular basis. We're more globally influenced now. But what about things, if you have a plan now, what is it based on? And what if when you go into retirement, things change? What if your health changes? What if the medical conditions you have change? What if the cost of insurance, health insurance changes? What if you go through, God forbid this won't happen, what if you go through a divorce? And unfortunately, we have a lot of students that come in that in their later years have gone through a divorce. What about kids or grandkids that might have some issues, maybe education issues, or maybe other things, special needs kids? We have students here that have to deal with issues like that. What if your goals change? What about inflation? Inflation now is around 2%. A lot of you probably don't remember back in the 80s, inflation was around 18 to 20%. What kind of an impact would that have on your plan if we end up going, and I'm not saying we will, but what if we do have, and we probably will have increased inflation, we just don't know how high it will go.
Al, that's a lot of what ifs right there. And that really creates uncertainty for a lot of people. What are you doing to help people not have those what ifs?
Well, the key is to understand how to make changes and how to be ready to make those changes. It might mean that the rate of return that you are getting now, maybe that wasn't enough. Maybe you right now think, or if you're in retirement, you thought what you would have would be enough, but that's not the case. Reality has taken over. The reality of the future might make what you have planned inadequate for how you thought you might spend those hopefully happy golden years. So here's some things that are important. Number one is learn how to reduce or eliminate fees, because those fees can take a significant amount of money away from what you could have in retirement. We talked about this last week, where fees can take as much as 50 to 75% away from what you could have in retirement.
How does that happen, though? Because people won't. It's hard to believe that. Why is that?
Yeah, it's because it's the negative compounding. It's that every dollar that's taken away from you in a fee is not there creating thousands of more dollars for you over the course of years.
So it's missed opportunity for thousands of investors here in Minnesota.
Exactly. And when we're talking about 50%, 75%, we're only talking about fees conservatively of around 2%. The reality is they could be closer to 3 or 4%. A lot of people look at their retirement portfolio and they look at the numbers and say, well, we haven't done that bad. Remember that a good portion of what you're looking at are your contributions, not the return of the accounts or the plan that you have. And fees are a big part of it. So reducing, eliminating those as quickly as possible, and we talk about that in these classes. You have to learn income strategies, because the income you counted on, you relied on from your job is gone. There are strategies. In fact, it's the more important thing is not how much you have in a retirement account, it's how much you can generate off of it. And there are strategies that we teach that show you how to do that. There's strategies you should be using now where you're growing those wealth accounts, but then you still use those strategies when you're in retirement.
Yeah.
And then also grow that account. It doesn't have to stop growing when you retire. That doesn't mean that it's over and that you just have to rely on what's there. There are strategies and assets you can use to grow it, regardless of which direction the market's going. And the number one thing is don't let somebody else take away your retirement money. You have to have that protected. You've worked 30 or 40 years hard for that. How would you like to have to start over at 60 or 70? Not too many people would like to do that, but unfortunately, there are a lot of people that are in that position. So protection is the number one thing that we're going to teach you.
Yeah, I like that you brought that up because the fees, that's that four-letter F word. I'll say that on air. Fees.
Yeah,
That's really diminishing people's returns, but it's really it's hard to say, but it's really hurting people get to retirement. They don't have enough, but they just don't know what's happening with their accounts, and they put their head in the sand because they don't know how. So when you don't know how to do something, sometimes people say, "I don't want to even try." Well, if this is your life savings, you want to. I mean, I would assume everybody wants to protect that or have their best potential, and that's what some of the different techniques and strategies that I'll teach is in these investing classes. Is what are those? What are those concepts and how to protect your portfolio, removing fees or at least lowering them to have the potential to retire secure. So callers 1 through 10, I want to invite you to this investing class. We do these physical here in Bloomington, and these are classes where we've taught thousands, just like you, are many strategies, and these are designed to teach you to make better investing decisions. Callers 1 through 10, call 952-814-4410. You're going to receive 2 tickets, but you're also going to receive the retirement planner when you attend. That'll help you get started right away. You can also text the word invest to the number 484848. You'll receive a link back. You got to register for the class through that link. It's real easy. And you'll get those tickets plus the financial quick start kit, the retirement planner when you attend. So Al, with all these fees that are diminishing people's accounts, really, it's lowering them.
Right.
And they're not even realizing it because it's missed opportunity. A lot of listeners right now are saying, okay, I want more opportunity to get to retirement comfortably and confidently. And mutual funds is part of that problem. And a lot of people say, oh, mutual funds are great because they're diversified and you're in all these different stocks. Well, they're not really that diversified because they're in one asset, which is stocks. And 90% of mutual funds underperform the market. What is an alternative? Let's just say somebody wants to self-direct or somebody is self-directing their accounts and they want to have an alternative to mutual funds.
Well, I would say right away that most of you, if not all of you, are already self-directing your retirement accounts. You're making the decisions in your employer-sponsored plan. The employer's not helping you, and the plan sponsor typically doesn't help you either. What they'll do is give you a list of things you can invest in, pat you on the back, and say, good luck, you make your choices, and then charge you for that.
See you later.
Right. Even if the market's going down, you're still paying fees. And pretty much it's a percentage of the assets you have. So the more assets you have, the higher the fees you're paying. If you're looking at 2 or 3% fees in an account and you have a sizable retirement account and you're making contributions, you may reach a point where the fees exceed the contribution you can make. So what most of our students want to do is take control of their assets, make decisions, which you already are doing, but make decisions with better choices available to you. The income producing, the leveraged assets we mentioned before, you can use those in a self-directed IRA. You can use assets that will give you the potential to benefit if the market is crashing. If we have a bear market, back in 2008, when the S&P 500 was down 57%, there were people that made fortunes during that time period because they understood the right assets and the right strategies to use in a downward moving market. It's the same kind of money that you make. It's just making money in a different direction. And you have the opportunity to do that in a self-directed account. What about an insurance policy? And we talk about that probably every week. Yep. There is a way to have an insurance policy on your portfolios, which means that even if you don't sell anything and the portfolio components go down in value, that insurance policy will go up to counter that.
Yeah, I want to talk a little bit about those income strategies because if people are retired, say you're over 59 and a half and you can draw from like an IRA without penalty or anything. Futures and Forex are phenomenal for that because people want income strategies. Utilize portions of your capital. You don't have to take your whole amount of money and invested in the market, which it
Correct.
is right now with a broker and advisor, which is 100% at risk. And with markets being at all-time highs, the odds of that continuing are much lower. So
Right.
you need strategies for short-term markets. And that's what futures and Forex will allow you to do. Think about the Forex market. That's probably the best market out there. It's the biggest and the baddest. That controls and dictates a lot of things that happen.
Hmm.
And if people are, say, you know about the current Forex is currency, right?
Right. Right.
The dollar, the yen. Everybody right now probably doesn't know it, but they are actually trading the currency market. If you hold US dollars, you are trading the currency market.
Hmm.
Think about it this way. If the stock market goes up 10% and the US dollar goes down, everybody knows the dollar has been devaluating for years,
Oh, absolutely.
and it goes down 10% as well. Did you really earn anything? Because you just lost 10% of your buying power. So understanding the currency market and utilizing that for income potential during your retirement accounts, your retirement years, might help you preserve what you have. You have to have that potential.
Right.
So if you want to learn more about those income strategies during retirement, learn them now before you retire, but also learn them during retirement so you don't have to draw down those assets. So callers 1 through 10, I want to invite you to this investing class. Al gets into futures, Forex, what they actually are, how to utilize them, how to manage your time properly. A lot of people think you have to be glued to your computer screen. That's not the case when you have a strategy, a core strategy, and a plan that Al has been talking about. So callers 1 through 10, you actually dictate your time with that. Callers 1 through 10, I want to invite you to this class. When you call in right now, you're going to receive two things. You're going to receive 2 tickets for this investing class. They're physical right here in Bloomington. We're easy to get to next to the Mall of America. And they're only 2 hours. They're free. And Al teaches these. Callers 1 through 10, one for you and a friend. Call 952-814-4410. That's 952-814-4410. You can also text the word invest to the number 484848. You'll receive a link back to register for this free class. And also, mention when you come into this free class, mention the retirement planner. There's techniques and strategies that'll help you get started right away. Al, what's next?
Well, let's continue talking about retirement. That is such an important topic, and we're seeing more and more people coming in now that are realizing how important it is to them and how far behind they've gotten, and they need to catch up. So let's talk more about that.
Yeah, if you feel like you're behind on retirement income strategies or whatever that may be, how to potentially get there or get caught up. Once again, for 2 tickets, call 952-814-4410. This is Josh and Al, Investing with Confidence. We'll be right back.